All right, welcome back, everyone. So today we're doing a deep dive. We're going to take a look at this document here called 360O in Panorama Jan 25 1.pdf. Now, I know that name might not exactly roll off the tongue, but trust me, this thing is packed with some interesting stuff about what's going on in the financial world.
Yeah, this report really does cover a lot of ground, and there are some pretty fascinating trends here that I think our listeners will really want to know about.
Yeah, I think so too. We're going to look at everything from like this one specific investment factor that has been crushing it since 2011 to some trends going on with household finances in India, things that might surprise you.
Right, like who knew those two things could even be related? But yeah, that's what we're going to see, how they all connect in a way that could even, maybe even affect your own personal finances.
Okay, so let's dive right in. This document talks about this investment factor that's been a real winner since way back in 2011. They call it momentum. Now, for anyone out there who maybe isn't a total investing nerd like us, think of factors kind of like characteristics of stocks that help explain why they do well or don't do well.
Okay.
It's like instead of just picking individual companies, you're looking at these bigger trends. But what's interesting here is this document says momentum, like as a strategy, has been absolutely dominant for over a decade. Why do you think that is?
Hmm. Well, one idea is that markets sometimes they don't react right away to new information. It takes time for things to sink in. So the stocks that have been doing well, they keep climbing as that information spreads, as more investors start to understand it. So paying attention to momentum, it can be as important as like researching specific companies.
Yeah, that makes sense. So if momentum's been so hot for all these years, what's been going on with some of the other factors during that same time? I mean, obviously not everything can be a winner,
Hmm.
right?
You got it. The document actually points out that value, another one of these factors, has actually, it's taken a pretty big hit, what they call drawdowns. Now, value investing, that's all about finding those stocks that the market, it's like kind of overlooking, it's like finding a hidden treasure that's worth way more than its price tag right now. But when value stocks go through these drawdowns, it's kind of like those treasures are losing their shine, at least, for a little while. And it's a good reminder, I think, that even strategies that have worked in the past can hit a rough patch now and then.
Yeah, for sure. A very important reminder. So momentum's up, value's down. What are the other factors? The document mentions COM24 specifically. Anything interesting going on there?
Yeah, so in 2024, momentum, it actually continued to be the top performer, followed by quality. Quality, that one focuses on companies that have like really strong finances, good management, that kind of thing. But there's another factor that I thought was kind of interesting, low volatility. Basically, it looks at stocks that don't have these huge price swings.
Okay, so maybe not the most exciting investment at first glance. What makes low volatility something worth paying attention to?
Right. You'd think it'd be kind of boring, but this document shows that low volatility, it often does really well when there are like market corrections, those times when everything gets all crazy and people start panicking and selling everything. Yeah, that's when low volatility shines. And what's interesting for you and our listeners is that low volatility has a pretty high concentration, what they call active weight, in the auto and healthcare sectors. So, if you're invested in those areas, understanding this factor could really be like a helpful thing.
Now, speaking of trends and things that might have a real impact, the document also looks at what's going on in India, specifically with their finances. And one thing that kind of jumped out at me was this mention of subdued net financial savings among Indian households in the 2024 fiscal year. What exactly does that mean?
Well, basically, it means Indian households, they're not saving as much money as they used to. And this is happening at the same time that India's household debt, when you compare it to their GDP, it's actually catching up pretty fast to the average for all the emerging markets.
So more debt, less savings. I mean, that just sounds like a potential recipe for trouble, doesn't it?
Yeah, I mean, on the surface, it does raise some red flags for sure. But this document, it actually gives us a little bit more context. It points out that subprime borrowers in India, so those are the folks with lower credit scores who might have a harder time repaying their debts. Well, they're mainly using loans for consumption. Basically, they're spending money that they don't necessarily have. But on the other hand, the super prime borrowers, the ones with excellent credit, they're actually using those loans to buy assets, things that are likely to go up in value over time.
So in other words, it really matters what you're using the debt for.
Yeah.
Like the why behind it makes a big difference.
Exactly. It's not just about how much debt there is, but also how it's being used. And we also can't forget that the Reserve Bank of India, they've been tightening up regulations recently, which has actually slowed down the growth of retail loans. And this is something that could have, a ripple effect on both spending and how those asset markets are doing.
And the document also points out something called a microfinance sector stress. Can you explain what that is exactly?
Sure. So microfinance, it's all about giving out those small loans to people who maybe don't have access to traditional banking. And the document, it's saying that there are rising delinquencies in this sector. What that means is more borrowers are having trouble paying back those loans. It's definitely a concerning trend, especially when you compare it to the fact that the overall banking system in India, they're actually seeing improving asset quality. It's kind of a contrast there.
So it sounds like we've uncovered a lot today. We saw how momentum keeps being this powerful force in investing, even though value has struggled. We see this rising household debt in India, but we learned it's important to understand like the different ways that it's being used.
Yeah.
And while the overall banking system in India seems to be doing okay, the microfinance sector, well, that's showing some signs that maybe we should be watching carefully.
Yeah, absolutely. And taking all this in, it's worth asking yourself, like, how could this information affect your own financial decisions, especially if you're an investor? Could this help you understand not only the markets, but like those bigger economic forces that are at work, both globally and, closer to home? That's something to think about as you keep exploring these topics. Thanks for joining us for another deep dive.
Thanks, everyone. See you next time.